It's Monday, June 2nd. Let's level up. Markets were able to rebound today off some early weakness. VIX has not been able to get over the 20 MA, 20.03 and hold. For the bears, they need to do that. And for me to really feel like there is a sweep the leg for the downside move in terms of price, they need to get over the 50 MA, currently 25.09, which had been resistance on 523. For the bulls, they have another leg to sweep. They need to clear the 1702 to the downside in the VIX. If they can do that, there's a chance at retesting the highs and maybe making all-time highs. Without that, I think it's going to be very choppy. It doesn't mean the market can't go up, but I don't think it's going to be that smooth, even rise that we usually like to trade. As far as the ES and the NQ go today, ES hit one of my resistance levels at 59.4175. We actually overshot. We're pulling back in the overnight session. Bit of a rich close. If that were to repair, that's 59.1375. In the Qs, that's 21,384. The Qs also ran into some resistance there at 21,529.75 to 21,558.5. So guess what? That needs to clear on the upside, and the bulls need to clear 59.4175 for the upside. If they can do that, I think there's a shot at the 59.77.5 and 59.93.5 and likely the 6,000 again. Qs, if they can clear the 21,558.5, the 2 times range is up at 21,948. As far as the SPY goes, anything that can hold 585.10 is fine. Below there, could see a larger liquidation break to retest the 575.35 and likely fill the 5.9 gap fill to 564.34. And right below there is the 61.8 at 563.02. So that 563.02 to 564.34 with the 50 MA, by the way, rising just below there is the likely next downside target if we do have the break of the 585.10. If the 585.10 holds, and I guess at this point you could just roll that up now to the 10 MA at 588.38, we could retest the 600, 610, and likely to retest the 613.23 all-time highs. We are in a nice consolidation here. I think barring news, the path of least resistance is higher, but if we do get a news that takes us below the 78.6, that's that whole MA to MA, and in this instance, fib to fib thing. As far as the Qs go, I think you could raise your stop to the 518.09, which is of course the 10 MA. I had said that this 511.19 up to 540.81 is a big chop zone. We saw a lot of consolidation there before the breakdown. As long as the 511.19 holds, I think it's okay, but if you're already long, I wouldn't let it get below the 518.09 10 MA on you. On the upside, the first resistance is really 536.88 and then 540.81. It would help if you started getting some of the big cap tech names to make some new highs. Apple has remained a little bit dicey. I do think that this will ultimately fill in the gap to the 223.89, but the path there is very treacherous. Could be a lot of chop in between there. For the first part, the bulls will need to get over and reclaim 203.93 to 208.42. There's a bit of a void in price there, although now that has filled in a little bit between the 208.42 to 214.66, and then between 214.66 to 219.38 is the next big resistance. Is also the 100 MA, and then the 200 MA resides roughly near where that 4.2 gap fill is at 223.89. Netflix still beasting, new all-time high today. I think you could use the 10 MA there as a stop. 1198.28. The next big upside target is that 2 times range at 1305.48. It seems like that will be the path of least resistance again, unless there's some type of news that takes down the broader tape. Nvidia had reported earnings. They were a bit of a pop and flop. It did hold roughly where it needed to hold at the after hours low at 133.25. It's now over the 10 MA, which is I think is a good race stop if you're long at 134.79. The next resistance to me would be 138.90 to 140. And then after that, a run at the highs at 143.17. If it does sweep the leg below the 133.25, I think we're likely coming down to the 61.8 and 200 MA. 126.87 to 127.72. If you want to do it the Chicken Little way, you could sell 100 MA or sub 100 MA puts. 100 MA is 121.98, 50% fib is 119.88. So anything below there I think is good. If you want to do a 1/2 put ratio, that's the downside target. Amazon's still acting well. I think it's all good in the hood there as long as the 201.49 to 201.95 area holds. That's a 20 MA and 50% fib respectively. The resistance starts at 211.52, which is the 61 218 all the way up to 214.84. Ultimately, I do think that this will make a run at the 220s again, maybe closer to the prime day, which is mid-July. Google, a little weakness today, not exactly what you want to see if you're bullish. There, I need to see it clear the 173.79 for still higher prices. Anything below there to me is chop. I do think that the 20 MA could act as some support at 164.78, and then the 50 MA becomes really the must hold at 160.10 if there is a downside move. But shorter term, the 20 MA could be a right or right out by the dip because it does line up with the channel low and trend line. Again, that's 164.78 and rising. And watching the tape, that 165-ish level was a little bit of resistance on the way up. It should, quote unquote, be support now. As far as Bitcoin goes, it is acting a little bit weak. We did have another look above and fail scenario. To negate that, we need to clear the 110,150. The 20 MA here is sort of the must hold, 104,999. If this can't hold, we'll obviously see the 102,554.78.6, because if, of course, the 100% retracement doesn't hold, the 78.6 would be the next logical fib retracement level. I'd feel better in the bull case if we got over 107,509, which is, of course, the 10 MA. Shorter term, if you're looking for moving averages to trade against, you can use the 100 MA 30-minute and 200 MA 30-minute. Either one of those will be support or resistance. Same thing, by the way, in the ES and the NQ. I've been finding that very helpful in my recent trading the last couple of sessions, so keep an eye on those if you're looking for areas to either buy the dip or cover shorts and or levels to trigger on breakouts. Interest rates were not cooperative today for the bulls. They were starting to look a little bit better, but they were able to hold the 84, 89-ish area. That area does need to continue to hold. I'd feel better with this over 85, 98, which is, of course, the 20 MA. I think that there's a lot of concern here about interest rates and possible inflation. I just think that this is an asset class that is seeing some diversification back into stocks and repatriation into foreign markets. I think there's also some concern over the budget, and I think that the markets would be alleviated if that could come in a little bit. As far as the dollar goes, this has just been a dumpster fire. I did have a decent close, but still very weak. Anything, in my view, below that 100.157 to 100.276 is really just conversation. Shorter term, you could use 98.976 as a pass-don't pass line. I think the 97.921 could get retested. We'll have to see if there's a double bottom. My guess is there would be a small bounce. Keep an eye out for a look below and fail scenario, because then you could get some upward momentum going. Generally speaking, the markets have run a lot. There's a lot of chopping consolidation up here. I think a lot of people are getting their options burned out, and they're probably having a little bit of trader fatigue. This time of year does tend to be a little bit iffy in terms of volume because you have a lot of people taking vacations. Usually when the market turns, if there's a summer rally, it's usually after July, though. Like mid-July sort of is when it tops out, around Amazon Prime Day, actually. And then you start seeing things roll over into the summer doldrums. August, September, October can be weak, and often we bottom on Halloween. I don't know that that's going to be the case this time. I think if there was some trade deal news that was positive with China, which is, by the way, would turn the market around today, that President Trump and Xi do some type of a phone call, and my guess maybe even meet soon. I don't think that that deal is going to get done so easily, and I think the undermining of the president's tariffs from the courts probably has countries like Japan maybe trying to hold back a little bit longer. Ultimately, I do think we see some more tariff deals done with the EU at some point, and likely with some of the Asian countries. The Big Five come to mind. As long as we're over those 78.6s, though, I don't see their risk of much more than just chop, with a larger liquidation break happening if it does cross below the 78.6. So keep that as your pass-don't pass line generally. If you want to be buying stocks, as long as we're above that, I'm cool with it. If we're below there, you might want to ease back and maybe try the short side. Like and follow for more.